Well, hello there, everyone. Welcome to another edition of Tip Tuesday. So, if you are live with us this morning or listening later on, we're glad to have you with us, joining us for these topics together. Today, we are in our last session of our January beginning series, and our topic today is consistency. So we're obviously going to focus specifically on trading consistency. What does that look like? How do we do it? Some of this will actually be very practical towards the end here. So at the start here, I'm going to go over some basic stuff, but as we move forward, it's going to be very, very practical today. And I think that's a really good thing, right? So it will be very practical. But I want to start off with just an understanding of what it means to be consistent. So consistency in and of itself just means that you are committed to doing the same thing on a repetitive basis. So when we talk about what it means to be consistent in our trading, what are we really talking about? What does it mean to be repetitive in our actions and also in our results? So what does it mean then for us as traders to really focus on consistency? What are the kinds of things that we ought to be consistently doing? So one of the things that I would say we need to be consistent about doing is realizing that we have to show up. Like, you have to physically show up. You have to be there. You have to be engaged. So you cannot be consistent in your trading without being consistent in your education, being there, learning, okay? And then physically being there, being ready, being tied in, okay, to actual trading opportunities. You can't just say, "Oh man, I'm going to go out there and find some good trades," without really putting in any effort or having any real plan as to how you're going to do that. So we're going to be looking for consistency in our effort. Then we're going to be looking for consistency in spite of our efforts. What do I mean by that? We may at times not get the results that we want, and we still need to keep doing things if they are the right things. If we are not doing the right things, then we need to change what we are doing and start doing the right things consistently. So it's not just enough, guys, to be consistent if the things that you're doing aren't producing the type of results that you want to see. So the second thing we're going to focus on is, so yes, I'm being consistent, but am I consistently doing the right kinds of things? And if so, that ought to produce the right kinds of results, which brings us to the third point of today. Okay. So we're going to be consistent, but let's try to be consistent in seeing the type of results that we want to see. All right. So those are the three things that we are going to focus on today. So how does that look like very practically? What does it look like very practically? And then how do I assess whether or not I'm actually achieving these things and doing something that should be done consistently? But before we do that, I want to talk a little bit about something that really kind of probably really solidified this for me a bit is when I was back in college. And, we had worked out when I was doing my sports stuff, but for me, I didn't really ever see that many significant results from working out. Part of it was just the way that we were doing stuff. So I was there, we were doing it, but it wasn't producing results for me. Maybe it was for other people. Hopefully it was, but it wasn't for me. So when I got off to college, I remember I'd started to get consistent. So I started to go in 4 or 5 days a week. I started to stay, not for just 30 minutes, 45 minutes, turned into an hour. By the time I got off to, seminary, I was working out 2.5 hours a day, 4 to 5 times a week. So obviously that produced very different results than going in 30 minutes here or there. Right. So we'll talk a little bit more about what that means. But when I was in college and I'd been working out finally enough, right, where I'd actually seen results, like you could tell my body was changing shape. I'd remember that some people would come in, and particularly it was girls, and like, I don't want to lift weights. I don't want to get big. And I'm sitting over here thinking, man, if you could come in, work out for a few minutes on the treadmill and get big, every guy in this room would look like The Rock. I mean, like that is not how it works. So they have this false idea that if I start working out, I'm just going to get huge. And I'm like, no, I work out really consistently and I'm pretty small still. Like, I mean, I put on some muscle, but no, it's not just about coming in a few times. It's not about just showing up at the gym. It's like putting in hard work at the gym. And then you have to do it consistently enough because surprisingly, if you kind of stop going for a while, you'll notice it when you go back, you won't be quite as strong. So you've got to be consistent. And then you've got to keep doing it even though it is hard. All right. So let's take that illustration and then apply it directly to our trading. All right. So if I want to see results, I've got to go into the gym. All right. So let's apply that to our trading. If I want to see results, I have got to immerse myself in the things that would produce the results I want to see. So what does that look like very practically for me? All right, guys, listen. S&P, right? So I've got to go over there. I've got to understand where is the overall market. So the S&P gives me an idea of what the overall market is doing. I have to understand what that's doing. So either each night, okay, I'll give you a choice here. Each night after the market's closed, so anytime it's convenient for you after the market's closed, go in there, check your lines on the S&P. And this needs to be something that's like an everyday thing. Like if you're planning on trading, this needs to be an everyday thing. I'm going to do this every single day. I'm going to go in there. I'm going to see where the S&P is, because if I haven't done that, there's no need for me to do anything else. If I'm going to be a trader. Now, if you're a buy and holder, then that's fine. Do whatever you want, because what the day-to-day activities of the S&P don't affect you. But if you're talking about, I'm going to be a regular trader, meaning I'm going to make decisions from one day to the next, from 1 week to the next, you're going to need to know what the S&P is doing on a day-to-day basis. You're going to need to go out there and you're going to draw lines. Okay. You need to know where is support, where is resistance, where is the S&P going? Why is it likely to go there? What does that look like? All right. So let's actually bring up another screen here. And I'm going to show you very practically what this would look like. So share screen. That's fine. All right, share. Come on. All right, I guess maybe I don't have anything yet. So let me bring this up. All right, so I'm just going to log in here real quick and show you guys your charts by Tradeway. We're going to actually physically just go through this process here. All right, let's see. Okay. All right, so this one right. Yeah, let's see what we're trying to show. This one. All right, there you go. Now you guys should see what's on my screen here. So we've got our charts by Tradeway here. I'm going to go over here to research, and then I'm going to click on chart. And I'm going to bring up the .SPX. Now, again, we can do this in the morning so you can kind of get a sense of, okay, the day is starting. We can do it at night, but then, where it opens in the morning, that might change. So I would say, yes, do it at night, get a clearer sense of what's happening, and then go in there and see in the morning, how has the market changed? So at the opening price and the early activity, what has happened? Now, we want to go out here and we want to get a wide view of what the S&P is doing. Yes, because what it's done historically matters, but what it's doing now matters more. So historically, we've got this really big line from 2022, which was resistance the entire time. However, we know that recently the S&P has broken through that line. It's the one right here. So here's what I did. I went over here to 1213 and I saw this this wick right there on Monday from a couple of weeks ago. And I said, well, I don't know that this line is going to matter, but it is a top there and it is a top there. So I'm going to acknowledge that on my chart. Okay. So this is me just being consistent with my chart. I'm regularly going in here. I'm adjusting, adapting my chart to adequately and accurately represent what is physically happening in the market at this time and overall. Now, having done so, you'll notice that really once it came up there, then the market did drop, hit the 20-day, and it started to move back up. This day right here, the S&P like just struggled. It stayed on this line for several hours, just sitting on that line. And I was like, man, that line may be really more important than I thought. Then it eventually moved above it. All right, so now let's talk about this. What is the thought process? How can I kind of consider how the S&P might be impacting me? All right, so again, just developing consistency here. So if you are looking at a pattern and you feel like maybe I've established a pattern, then you say, well, what happens when it breaks out of this pattern? Now what we're going to do is the most obvious thing is we're going to say, okay, now that it's broken through, what's most likely? So a breakout up through resistance means that we have momentum, meaning it should keep moving up. Up to where? First thing we're going to do, guys, the most useful thing I can kind of teach you this morning is you look back to the left. Remember, what it's done in the past matters. What it's doing now matters more. But if I'm looking at what it's doing now, I want to look back to the past to see if that might impact it. Okay. So I look over here and I see 4,100. And 4,100 is really strong because when it hit 4,100, look at the drop. When it hit 4,100 again, look at the drop. So that indicates to me that now that we've broken through resistance, and then it even broke through this other line of potential resistance, well, then this thing is going up. How far? Not up forever, not in the short term. Where might it go? 4,100. So on this day here, you have a pretty good idea the S&P is going to climb the next day, meaning I need to be thinking more bullish. And sure enough, we got within about 5.5 points of 4,100. Now, I'm a little surprised. I'll be honest with you guys, a little surprised we didn't hit 4,100 exactly. A lot of times they're that clear. They're that obvious that it's going to go up to that price point. We didn't hit it, but not surprisingly, it fell yesterday. Why? Because it fell on Friday when it tagged that line or got close to that line. So we got close to 4,100 and people started selling, albeit a little bit early, but they started selling. Well, I would know this. I knew this back here. Now, I say new in air quotes, but that's what the pattern would indicate. That once we broke the resistance, we would climb up to 4,100. And then once we hit 4,100, I was telling all of my people that were listed, go ahead and buy puts because it's going down. And I was teaching on Friday and missed this opportunity. But boy, it sure did drop. So we closed yesterday at 40.20. That's almost an 80-point drop from our high around 4,100. That would have been a pretty sweet little trade there to turn bearish. Now here we are this morning, and the S&P is trying to recover a little bit. That's fine. The Fed speaks on Wednesday. That's being aware of a news event. Okay, so I'm not too big on news events. I put a lot more focus on market tone. Market tone is impacted by news sometimes, but a lot of times the S&P is going to do what it's going to do, and the news will just kind of do its thing to kind of foster what's happening there. Well, the news on Wednesday is big because the two big things that are driving real drivers, real news drivers at this current time are the Fed, if they're raising rates, and if so, how high, and the consumer price index. We know it's way higher than the Fed wants it to be. They're trying to lower it, so they've been raising rates to try to create that drop in the price of goods and services. It's worked some, but not nearly to the extent they want to, and yet there's a prevailing thought that the Fed is going to pull back. I don't agree with that. However, that sentiment right there. So all of December, this 48 or 3,800 area acted as support. Yes, we closed below it one day. We had some wicks below it, but outside of the one day, we never closed below 3,800. So it created a sense of strong horizontal support. Now notice over here, guys, I've drawn in an extra line. Why? Because this represents the current trajectory. And if we were to take this line here and move it, you'll notice what would really be clear here as well. That if I take that same trajectory of this horizontal support line I've drawn, that is a very clear resistance line too. Okay. So that is our support line on an uptrend. We have a clear uptrend in the very short term. So if you're thinking right now, oh, I'm bearish, well, you need to be bearish in context, okay? Because overall, right now, this is a bullish uptrend, has been now for 3 to 4 weeks. Could it bust out of that? It could, but then we have to kind of think through different things. All right. So consistency in noticing, drawing lines, getting rid of lines if necessary, because you guys don't want to have too much of a spider web. See, I only have what I have on there right now. 1, 2, 3, 4, 5 lines. And some of you guys are like, Geoffrey, that's already too many. No, that's not too many for me, not even close. But I want to get rid of lines that I don't think matter anymore, which is why I'm kind of waiting for us to get out of this area so I can get rid of this line. Because remember, I just dropped it in there temporarily to see if it was going to matter. It did matter short term, but I'm ready to get rid of it. I can get rid of these. If I don't think they're going to matter historically, I'll keep them for now because, again, they're going to kind of go off our screen anyway, so it won't really matter. We'll keep this one because it was such a major line, and then we'll keep this one. And then I'm thinking about replacing this one with that additional resistance line. So be consistent in drawing your lines. Now, once you've drawn your lines, guys, the next consistent part of your activity needs to be going out here to your watch list. Let's just say we're going out here to the options list, and then starting to find stocks that line up with what the S&P is doing so that you can tag those, select them, right? So this kind of looks like the S&P, aim at here. And then I can scroll down here, and I need to start now. It's hard. If you're a newer student, it's hard to recognize what's really happening on these little windows here, but we can still get a sense of, is it moving with the market? Does it kind of make sense? Is it in a recognizable pattern or somewhat recognizable pattern? And then once we move it over, we can begin to see, okay, that makes sense. I might be able to do something with that. And we can move that over. So I'm just going to try to find 1 or 2 more that are going to be a clear pattern. Here's one. All right, so that's making a flag-ish. Now it's Microsoft, so it's expensive, but we don't care for right now for what we're doing. And then there'll be a couple more that are making some pretty clear patterns here. Now is making one. Again, it's pretty expensive, but you could eliminate those. You could say, I know those are going to be too expensive for me, Geoffrey. I'm not really going to trade those. Well, again, you can kind of keep looking for things that are cheaper. Tractor Supply is one we looked at last night. We looked at this as a flag. You can notice here, guys, that it's up almost $2 today. We looked at it on the webinars last night. And there's actually several flags out there. So it'll be real interesting to see how they respond to what's happening. But a lot of flags out there. And so we can go look at those. Now, I'll put those in the beaker here, and it's going to move them over. So now I can look at these, go over here to chart, and let's just see if any of these align. All right, so there's AMAT. It's down here at the 20-day. Okay, interesting. That kind of is a good buy point for it to move up. Oh, wow, here's Microsoft. So it's making a flag. It's at a great buy point, so we kind of got that one right too. All right, here's now. It's kind of making a flag. It's really struggling to move up, so I don't know. We'll see. We'll see what it's doing, if it makes sense. Here's Tractor Supply. Wow, that one's starting to make a pretty good move. Only concern is, look at that wick that's already there on the top side already this morning. So it's not maybe showing as much strength as we might like to see here. Oh, we brought this one up. We thought it was good, but it's actually kind of messy. We may have to try to draw some lines on it, but it's kind of messy. So we might just get rid of it because it's not really doing something that's really clear to us. All right, so there we go. Now then, guys, the next step as far as consistency is getting in these trades, learning how to push the buttons, getting familiar with the buttons, and then getting consistent in your trading. So in other words, you're getting in the trades, then you're assessing the trades, you're evaluating what you did. Did I get in on the right day? Did I understand market tone? What did the stock do? How did I respond? So now you're kind of checking your emotions. How did all these things work together? Did I follow my plan? Did I not follow my plan? When stocks go my way, how do I tend to respond? When stocks don't go my way, how do I tend to respond? All right, so we're doing the evaluation, and then we're tweaking. All right, what am I doing well? All right, let me continue to work on that and do that well. What am I not doing poorly? All right, is this something I can fix on my own, or do I need to talk to a coach to fix this area of my life? Because again, I can go work out, but if I'm not doing things that are likely to produce the results I want, then yes, I'm I'm doing activity, but it's not necessarily fruitful activity. It's not going to produce the results that I want. So can I see some things that I'm clearly doing wrong? Can I fix those on my own? Or do I need to be humble enough, okay, to say I need some outside help and to go find that help and get that outside help so that I can start doing things consistently, but I can start doing things that are more likely to produce the results that I want to see consistently. All right. So now, assuming that we are doing all of this, we are trading, we're assessing, we're tweaking. Now let's evaluate. Am I getting the results that I want? Am I starting to see the results? Are they becoming obvious? Because here's what tends to happen. When we do things consistently enough and we do things right and consistently enough, so it's not just one, it's right and consistent. When I do things right and consistently, then over time, by sticking with it, I should start to see results that I want to see. And if I can be consistent enough and do it for long enough, maybe even other people will notice my results. That's what we're going for, because once you start to see the results, it adds in an extra layer of motivation. Once other people can kind of see that, wow, you've really made progress here, then all of a sudden that kicks your motivation into another level, guys. But listen, that's going to spur you on. That's going to encourage us. That's great. But we still have to keep going. See, we still have to keep doing all the things, because at some point it may get tiresome. It may get, just kind of boring. But we got to remember, what is our why? So what's my motivation? And is it enough to keep me going? And if not, maybe I need to find some encouragement from somebody else so that I can keep going. All right. Because I want to see the results. I'm going to keep doing the same thing over and over again, because I want to see consistent results by doing the right thing consistently. All right, guys, that is our tip for today. So hopefully that's very helpful for you guys, that you have enjoyed today's lesson. And we look forward to being with you again in the future. We're going to switch in February and go to a new series, and that's always fun. We'll have more for you starting next week. Appreciate you guys being with us and joining us for Tip Tuesday. We'll see you next time.